The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX like we usually do. As you can see, it is not responding to any type of rally theme that we have going on here in the U.S. That is not a bad sign for the U.S., but it's not a good sign for the DAX. That's about the only way you can refrain from, or the way you can look at this. Let's take a look now at the FTSE. This chart is really a beautiful chart, folks. It's an hourly chart going over the last 12 days. If you ever want to see harmony and repetition in the market, just take a look at this beautiful FTSE chart. You have a beautiful three-drive pattern that occurred here on the 22nd. The market went from 71 all the way down to 69.20, just making a beautiful double bottom. And as you can see, the ABCD structure that was in there between the 15th and the 22nd also lined up perfectly. And remember, it does this without reading any of the newspapers, either in the United States or London or any place else. So let's keep an eye on that because it's a very interesting one to watch. Let's just take a quick look. We've had a request from one of our favorite people, and that is Mr. Z down in Florida. And his question was about Apple. Does it have a chance on this next leg to make it to 205? What we're looking at here is, you notice we had the beautiful ABCD pattern on Apple come in on the 10th. That was the day we had the big down move in the stock market. That was a perfect 382 retracement from the low on July the 25th. The ABCD structure from October 1st into the 10th was just absolutely spot on. It couldn't have been any more perfect. And from that level, you see we had a rally up, then we had the big move down, and then we've had another move up. Now, you can see here a little bit higher, up around this 225 level. We closed at 222 and change. That's strange. Maybe they read the Gartley book. But anyway, around between 225 and 229, the market should not get much above that, because that would set up the ABCD structure that would take the market from the high that we made around October the 2nd down to the low on the 10th, up into wherever this high is going to be, and then down to the 205 level. So that's what I'm watching in Apple. It's very similar to what we see happening in the overall market. Those of you that subscribe to the 24/7, remember that our theme this week was that we were looking at a really symmetrical chart here in the NASDAQ 60-minute. This covered the last 3.5 weeks. It showed the beautiful patterns, all the symmetry, much like what we were looking at in the FTSE, and that measured down to the 69.70 level. And lo and behold, you'll never guess what happened yesterday. Bada bing, bada boom. You'll see, what did we hit? 1 second. Oh, this was the update on Monday about Monday's close. But let's put the last price in so you can see what was actually happening and be able to see how some of these patterns unfold. We'll get this up here. 1 second here. Where are you? There we go. Let's get it up here. And you'll see that we went down and we went below it by 10 points, folks. And then from that point, we rallied like the proverbial striped deer. And we're still in the rally mode. I think this is nothing more than a little bounce in a bear market, folks. We're looking at something that is real sinister out here. So we want to keep an eye on that as we go through. Now, there's a lot of news out there about the U.S. dollar and the euro and all of this stuff. Let's just take a quick look here. In fact, we're going to take a little bit longer than a quick look at the euro this morning. Here's the euro on the long-term weekly basis. And as you can see here, this has a very negative bias. Now we got down to the, we went below the 114 level, and we'll explain that in just a moment. But you can see here, any move below that 113 level sets up a level of 105. Whether that would be related to something with Brexit or whatever, I don't know. But you could be looking at that very, very closely. So pay attention to that level. We always send daily emails out on the euro and videos, describing where we are as far as shorter term patterns, because it's a beautiful thing to trade. Let's just take a quick look at how we got down here on the euro. If we look at this pattern from what we were looking at just a few days ago, yes, someone's asking, would you have an idea of where the rally in ES could be? Yes, and the answer is, so I hope that helps. So let's move on to the next one here. We'll take a look here at this euro. I'm just joking with you, Maria. I don't know where the rally is going to be, but we'll take a look at the euro in just a minute. Hey, Maria, come on, sweetie. You're as good at this as I am. So just follow your numbers. Everybody in the room puts you on a pedestal, so you do great. I was joking with her, Terry. Let's do this euro first, and then I'll cover the E-mini in just a minute. Here's the euro over the last few days. You can see the big ABCD pattern that we have in here, heading lower. What we've done now last night, and this was in the middle of the night that this was going on, you can see how harmonic and beautifully traded this euro can be. Take a look at this. You can see in the middle of the night, last night, well, mid-afternoon, I guess, you'll notice that the euro made a perfect ABCD pattern that stopped at 1.1495. That was a 70 pip rally. That's right spot on to the harmonic number. That was right at a 50% retracement. And then from there, you made the ABCD pattern, went right down to within 5 pips of the exact low, the low being 113.77. And the prediction was for 113.80. Now that means we're probably going to get some type of a pretty good rally from this level. That's what started so far. We're up about 20 pips. Whether that means much or not is still a little bit early to tell. But this is what we try to do, is to scale down as we look at from pattern to pattern to get to the area of where we're going to be. Yes, the lottery was won by somebody in South Carolina. I don't know what they're going to do with 900 million tax-free dollars, but that should be enough to let them eat out a few nights a week. That's absolutely for sure. Okay, folks, we've got a couple others that we want to talk about, and one, of course, is our folks in Hong Kong have had several questions about the NAS. Let's try it again, about the Hang Seng Index and what it's been doing. So I want to cover that just to show everybody, what we're looking at here. Here is the Hang Seng Index. We'll just get it up here to take a look at it. This is where we were today. There we go. You'll notice that we came down, we had that big move up, and all we did yesterday to cause the market to break was we went down and tested that low one more time. Today, we've actually held that level, and so here we are over this full moon, which is today. That would give us a chance to say, yes, there's a pretty good possibility that we might be looking at that bottom to hold in that. So we have to just wait and see. Here it is, what it looks like as of the big drop. This was due to the drop in the Chinese market, of course, and now we closed at 25,500, I believe. So we've tested that level of 25,000 very closely. Folks, any move below 25,000 in that NASDAQ is not going to look very pretty. That's the bottom line. So we'll take a break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're going to talk just a little bit about the U.S. dollar index because it's in the news quite a bit. We've gone above the 96 level. This is what we were looking at coming in at the beginning of the week to see whether the market was going to go up and test the 97 level. We're not too far away from that right now. The whole key to this chart from a technical basis, of course, is what happened on the 24th of September when we completed the ABCD pattern at exactly the 382 retracement of the low that we made way back in February. That February low was so important. If you'll notice, between January, February, and March, we really stayed down there for quite a bit, building a huge base, and from that level, from that 88 level, you know, we've gone quite a bit higher and breaking above. I haven't even gone into the really longer term one, but if you go into the, if we get above that 97 level by very much, you're going to be looking at something that would really be very, very significant. Looking at it here on the weekly basis, you'll see that it will take us up to the par level without any trouble at all. But you can notice that level at 88 that we were just talking about. You'll see that that was a 61% retracement off of the low that we had way back in 2014. And how could we ever forget back in 2011 when Tom O'Brien came on and coined the phrase King Dollar? He was very, very bullish, the dollar down there around 74, and away it went. I think he made himself a few shekels on that one. But anyway, this is what we're looking at here. The fact that if we can get this above that 97 level, the next level would be par. And if it does it, it could do it in rapid fashion. Going to par, folks, would be equivalent to the euro going to about the 105 level. So that's another one that we want to keep in mind as we look at some of these things at each day as we follow these different charts. Now, we have another one that looks very interesting today. That is the we have the full moon, and then we also, I'll take a look at oil in just a second, Ruby, and you'll see that we have the December wheat has a nice pattern completing down there at the 504 level. Let's take a quick look here at the crude oil. We'll just look at it here. Just get it, because we're right at the proverbial moment of truth in it. If you hold on just a second here. Now this, let's just do it with a 4 hour so we can see it really quickly here. We've had this big move down. I'll just put the numbers in, and then we'll take a quick look at it. We did hit the just a little below the 78%. Oh, shut the front door and raise the rent. Something happened. That's not good. Oh dear, not good. I lost the den. Doggone it. I don't know if I can be heard or not. I think I have a technical problem here, but nothing else I can do about it. I'm going to continue talking because I really don't know what's going on. Anyway, the crude oil is at a real interesting level right here at 67.20. The reason why I say that, if you go down to about a 15-minute chart, you'll be able to see that there's a beautiful ABCD structure coming in here right where we're trading right now at 67.20. That is just like the one we looked at in the euro. If you look at the one that we had back on the 29th, we had one the other day. It was very similar to that, so let's keep a close eye on that one. I hope I'll be back in the room in just a minute, and I think we'll be okay. I don't know why these things get disconnected, but they do. And hopefully I'm back in the room. Now we're going to post this chart here for the crude oil, and what I'm going to do now is I'm just going to go down to a 15-minute chart so you can see this. Oh dear, what do we got going on here? Boy, nothing worse than technical analysis gone astray without being able to fill it. Okay, I'm just going to draw this in so you folks can take a look at this little pattern that we're seeing here. Boy, this is a frustrating day when the old patterns don't want to click on like they should. There we go. That should be all right. That should be all right. Oh boy. Bear with me one second, folks. There's a little bit of a technical issue here that I'm having a slight difficulty with, but I will get it taken care of, and there we go. All right, this is what we're looking at right now here in the euro, and you'll be able to see this. It's not your fault, Ruby. It's the fact that these computers have a tendency to be a little bit fuzzy. So anyway, right this level here at 67.22 is where, if you have an interest in being on the short side of crude oil, that's a good place to have it. Now, anything above 67.45, that's a 25 pip rip. This is probably going to be wrong. So around 67.22, we're 67.27 right now. So that's all. Well, that's what we're looking at that point, but it doesn't mean necessarily that it's going to get there. So pay close attention to that. That's going to be a very, very interesting one, because the fact that we hit that 78% level down there at 65.70 last night, I certainly think that that means something, pretty substantial. In fact, it went a tiny bit below it, but now, it's trading above it. So that's it. Look at the last rallies that we've had in crude oil since the bottom, folks. Each one of those rallies has been about $1.50. So you could still get $1.50 rally in this, and it would still be bearish. So remember that, it's all about risk control. It's not about how much money you make. It's about how much money you don't lose. So watch what you're losing instead of what you're making, and you're going to be, far better off than if you don't be watching it that way. So we'll take a, watch this eventually. But the only thing that would change my mind here about being bearish crude oil is if we can rally above about $1.50 higher. If we got above 69.50, then I would have to say that we're most probably getting ready for a move, to the upside. But until that happens, it's been bearish, and it's fulfilled all of its objectives. So the question is, where do we go from this level? So that's what I'm watching. I hope that helps. Anyway, we'll do one thing at a time and see if it helps. That's all we can really do, not much more. Okay, the stock market. What we're looking at today, we've had a pretty good rally. We're basically unchanged on the day, I believe, maybe up a little bit from what I saw earlier. And there's, strong support here at that 2690 level in the S&P. And of course, we saw the NASDAQ, how important that was. So all of that tells us that we've made some type of a minor bottom, probably related to this full moon. But it's still, again, it's still a little bit early to see if that is going to be the case or not. Regarding the Treasury bonds, yesterday in the Treasury bonds, Mr. Z was talking about the 139.22 level. We only got up to 139.12. We dropped a full handle down from that level. That's telling us that this market has just probably completed a very minor ABCD pattern and then heading lower. The rates are going higher, folks. It doesn't make any difference what the Federal Reserve does and all the rhetoric about this and that. The Fed actually follows the markets. They don't set trends very often. They're in there as the market of last resort, of course, with their plunge protection team, but the rhetoric that they talk about, I really don't think it means very much at all. I've seen it through all these. I think I've been through 6 different Fed chairmans now through the years, and each one of them is a little more colorful than the other, except this Mr. Powell hasn't made his mark yet, but I'm certain that he would. We do have an interesting question from one of our listeners that we'll cover when we get back to the break, and that is about how do you decide which place to trade when you're looking at so many different numbers? We're going to cover that when we get back from the break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and Mr. Z has asked a question about Christmas cotton, December cotton. As you can see from this daily chart, we've got up to around 79, and a normal pullback, a 61% pullback, would pull you down into that high 7,700 level. If we take a look at the longer term chart going back well over 2 years, you'll notice that when we got down to that 75 level, that was at a perfect 61% retracement. If you'll notice that it made a beautiful ABCD structure from the high way back in May. The breakdown into June, we rallied up to a 50% retracement into July, and then completed the ABCD pattern right to the downside. Folks, there's a really interesting formula. If you don't want to do these by hand, you could do them mathematically. The formula is B plus C, add B plus C together, and then hit minus A, whichever the high or low point is, and that will give you that formula to tell you what the exact price is for point D. So it's B plus C minus A equals D, and there you go. It's Mr. Pythagoras in action. So that's what we're looking at here in Cotton to Fluff. So we'll keep a close eye on that, as we always do. And what we'll do now is we're going to take a quick look here at some of these other markets that are opening, and here we go. Not too much. Well, the S&P is trading around 2740, no big deal. And we'll see what happens with it. The euro is still trading around that 114 level, the low being 113.80. It still has bearish momentum, but whether it'll have some type of a move or not, remains to be seen as we look at some of these markets. Now, the gold market, of course, made a beautiful retracement up to that 1243 yesterday. That was the perfect ABCD pattern in the gold going back to last December. That has completed that pattern, so we're looking for so far gold has sold off $15 from its high at 1243 yesterday. We're now trading around 1233, but any move above that 1243 level would most probably propel it to above the 1260 level without too much trouble. That's the way it would look, from these particular levels. Folks, there's one chart that is so very bearish that, we've been watching for quite some time, and I haven't updated this because this is the one from the newsletter that I put out on Friday. But if you look at this Dow Jones Transportation, the fact that we went up to the exact 382 and then rolled over, and of course with the weakness that we had on Monday and Tuesday, you already went quite a bit lower. You haven't reached the target by any stretch of the imagination, but that's what you're looking at in the transportations. And when you take a look at the utility index, which we don't do very often. 2 years ago, they watched that Dow theory quite a bit. I mean, it was really a really big thing to watch. But you'll notice the utility index now, you'll see that it made the 3 drive to a top pattern in November of 2017, and we had the big breakdown, the rally up, and we have been up here at this double top, and we've touched it again. So there's a triple top in this area here in the utilities. That's got to be related to the interest rates and people searching for higher yields. But it's a very interesting chart because if we can get this thing a little bit higher, this would be a big breakout in the utilities, and this might mean that maybe there's going to be a little pullback here in some of these interest rates. In other words, we might get a little bit higher rally. We've been down 8 weeks without any bounce at all. That's a very, very distressing sign, I would think. So kind of keep an eye on that because, I keep an eye on it for all of our subscribers, but one thing that we want to do is to watch it closely. The thing that's really important today, folks, is that U.S. dollar index, what it's doing, what the euro is doing. The British pound is another one. That's another one that is very, very close to, something really, really big happening. And let's just take a quick look at it. You'll see here's what it looks like over the past couple of days. Just looking at the 15-minute chart, you'll notice that we have this, hold on one second here. We have this ABCD structure coming in. If you look at the A leg, which is way back on the 16th of October, your B leg is on the 19th. It rallied up to a 382 retracement. That tells us we're going to about 2870 in the British pound versus the U.S. dollar. The last trade I saw was right at 129, so it's getting very close. to that level. That's all related to this U.S. dollar with the yen and all the others. They're all coming together at the same time. That's when you trade currencies, you got to start with that U.S. dollar index. And then what I do is I break it down into the 6 major cross rates. The 6 majors are the Aussie, Canadian, pound, euro, Japanese yen, and Swiss franc. Those are the ones that we look at. I don't trade the Swiss franc anymore, mainly because I don't trust those dudes over there after what they did with that big bank robbery about 4 years ago that hurt a whole lot of people. I fortunately was not involved that day, but I certainly could have been. That's the only time I've ever been really banged around badly was back in '96, is when Greenspan came out at about 10:30 in the morning, very unexpectedly, and raised interest rates. Lowered interest rates, and the S&P ended up having a 50-handle gap. In other words, it was trading at, let's say, 27.40 right now. Well, the next trade was 27.90, and that was not a good feeling. Okay, let's take a look here at this question that one of our listeners has. It's a very interesting question because here you have 2 examples of different price structures that you have. The one on the left, you can see that he's looking at the 1.27 and the 1.618, and the one on the right, he's looking at really big expansions. Well, folks, they're both right, because the one on the right can only get there if the one on the left works, because you don't know which ones are going to work. You're only dealing with probabilities. 2 things that can help you, that will help you trade with the probabilities, is look at the structure between A and B. If the structure on A and B is equal to the structure that you see in C and D on the first example, that tells you that that's your sell zone. Now, if it does something different, and I mean by something different, coming out of point C, that's the whole key, because if you have the ABCD formula, point C is going to give you a pretty good idea of where it's going to go in D, because if it comes out of point C really, really strong, folks, you can guarantee that that CD leg is going to be 1.27 or 1.618 of the AB leg. So it's all based on probabilities. You don't know which ones are going to work. You never do. So all you can do is prepare the ones that you think you have, and that's it. Nothing more, nothing less. So those are the things you got to keep in mind. It's not about how much money you make. It's how little you lose. You know, you watch that, because that's the only thing that you can control in the risk-reward equation, is the amount of money that you risk, because you don't know how much profit you're going to make, and you don't know whether the trade is going to work or not. So those are both unknowns, but your risk, that's a known quantity, and that's what you have to work with. And that's the difference between usually the neophyte trader and somebody that's been trading for a while, is they focus on the one thing that they can control. And believe me, that's a hard thing to control because of all the emotionalism that comes into these markets, and that makes it a little more difficult as we see some of these things unfold. But we'll cover some of these other things on these other markets that people have asked us about this morning. We want to certainly talk about the FANG stocks a little bit, because they're still under a little bit of pressure. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the quantitative edge under the newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I've posted the chart of the daily British pound. We looked at it on the 15-minute to show you that we have a lot of patterns coming in at the 1.2880 level. We've been to 1.2897, I believe, this morning. But if you look at this daily chart on the British pound, it's telling a different story than what we're hearing in the news. In the news, it appears that everything has been done to Theresa May that can possibly be done except for plan her funeral services, because she seems to be going out of office. But everybody thinks that the Brexit thing is something different is going to happen. And frankly, this chart is basically saying the pound is almost finished with this move. Now, whether that will do anything to what's going to happen to the pound versus the dollar, I have no idea, but nobody else does either. So keep in mind that this is something that is, relatively profound. That's what I think you would be looking at. Now, let's take a quick look here at the E-mini S&P, because we've had several requests about this. You'll notice that we had that, once we went below that 2730 level, we immediately dropped 40 handles. We got down and we took out the lows of early October back on the 10th and 11th by just a little bit. That's when the NASDAQ was completing the big ABCD pattern, not taking out those lows. So that was a positive thing. So what we could be looking at right now is nothing more than an ABCD structure to the upside. From the 23rd of October, up in, and the low we made yesterday late, that was almost at a perfect 61% retracement. We missed it by 3 points, and that ABCD structure takes you up to 2772. Now, ideally, and it's never an ideal situation, of course, but ideally, if you could get above the 2755 level, you'd be looking at 2772. Ideally, you would like to see that happen in about 2 days so that you have some really nice structure to complete the ABCD pattern and say that that would be the one that would be really close at. And the other thing that's important about that is if you look at it really closely, you notice that 2772 is going to be a 61% retracement of the whole move that started on the downside of this leg, because the high was at 29 and change. This is only the last few spots of it. But that would be the first ABCD structure since the 16th of October coming in at 2772. It's a bit early, of course, because we're trading at 2741, but it's still early enough to sort of prepare that it could get there without too much trouble. Now, there's also a possibility we could go down one more time and test that Fibonacci relationship on the downside at 27.17. We could get down to around 27.12. And believe me, when you're moving 20, 30, and 40 handles a day, folks, these numbers are not hard to hit. We're not like we were during the mid-June and July and early August. It's not like that anymore. Volatility is back, and it's going to stay here. So you have to be able to prepare yourself. What you used to have to risk 5 points on the S&P, you probably have to expand that out to about 8 or 10 points just because of the stuff that's in the market that makes it jump around a lot. That's what we're keeping an eye on. So watch that closely, because it's one that has some really good potential. If it gets up to that 27.72 level without any trouble at all, we'll be able to find out in just a minute, the next couple of hours, whether it's going to be up or today or down. It'll test either one of those numbers usually, but not 100% for sure. We really are never sure about this at all. Remember, folks, that we were looking yesterday at the possibility of the long-term price objective in that euro to get down to in the ES to get down to around that 2600 level. We didn't quite get there, but that pattern is still outstanding, but it's still a little early because we've only been bouncing for 2 days. So all I know for sure is the fact that we're going to see bigger volatility. I mean, we're seeing 30 and 40 point swings several times during the day in these indices, like in the S&P, and that's ideally for what we do, swing trading. I mean, it just can't ask for anything better than that. Just looking at the patterns, you can see how they bounce off these numbers, almost like magic. We've looked at the euro, we've looked at not Australian dollar, what am I talking about? The British pound, we've showed several examples on that. We're looking at the December wheat, a quick look at the crude oil, that was on a really short-term pattern, but, they don't work. The problem is that you'll be able to see. Now, we just got notice from the New York Stock Exchange that Apple has just made a high up at that price that we were looking at, which was 225, and the high was 224 in 10 minutes. So let's see what's happened. That could very easily be. Now, this would be one because of the opening price phenomenon. That first 15 minutes, that would be a place where you would be looking for a potential high in the Apple. But anything above 226 would tell you that you're going to go a lot higher. All we've done now, let's just bring that Apple chart up, because since we were talking about it earlier, we might as well see where we are. And you'll be able to see it could be doing that very easily, and we could be charging ahead quite a bit. The number actually that we were looking at here was 225.37. That was a spot on 61% retracement. The whole move down from October 1st down into October 8th. The ABCD structure takes you to 225.37. Mr. Z, if you put that on your monitor and let us know if you see that one, because that would be something that would be, very, very interesting to see what happens. I had a question here this morning about the Christmas hogs, and we'll just get those up, and you'll see that the Christmas hogs went right down to our buy price at 51 bucks. We rallied 2 cents a pound the first day, so that puts your stop at absolutely break even. So if you're in those December hogs, you buckle up and wait and see what happens, because this is our first ABCD structure in the December hog since we made the 3 drive to a bottom pattern when it was way down there at 44 cents. Someone's asked a question yesterday about the World Series. Yes, I used to go to the World Series games when the Dodgers were there back in the old heyday, and we've had some wonderful times there. But my favorite Dodger game of all time was when Kirk Gibson did the thing with the home run against the Angels, against the against not the Angels, the Oakland team. Athletics, the Oakland Athletics in 1988. But we were there in 1984 when the greatest play in all of baseball happened, folks. It was out in center field, with someone from Santa Monica, California, playing for the Chicago Cubs named Rick Mundy. They tried to burn the American flag in center field, and Rick Mundy came out of his position running like the wind, knocked over the 2 guys trying to burn the American flag, grabbed the American flag, and ran it around in center field folks, that is the loudest it has ever been in Dodger Stadium, and that includes the home run that Kirk Gibson hit that night. That was a really, really big day. That was in April of '84, I believe. We were there with the kids, and it was just absolutely. You can go on YouTube and look at it, but they refer to it as one of the greatest plays in all of baseball. So that's it. Got to respect the flag, folks. That's why we're here. You know what I mean? Got to love it. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've reposted that chart of the 15-minute crude oil, the Christmas crude oil. You'll notice that we're now trading at 67.12. The number we were looking at was 67.24. The high today so far has 67.34. This is for short-term scalp trading anyway, but if it gets above 67.44, that'd be a 20-pip risk. You certainly would be wrong on this. So that's what we're watching. It's just an ABCD pattern and a 382 retracement. Sometimes they work, sometimes they don't. It's not about the ones that work, folks. It's about the ones that don't work. Those are the ones you have to focus on. The market will take care of itself but you've got to take care of your equity, and that's the whole key to what we're looking at. So protect yourself if you're wrong, because believe me, you got to kiss a lot of frogs when you're out there in a pond in order to find that way into the shore. So be careful here. Just protect your losses at all times. That's there's always another trade coming along that looks good. That's for sure, without any trouble at all. So pay attention to that. It's very, very important. The final question that someone's asking about the weakness in silver versus gold, folks, I don't know the answer to it, but silver is, remember, it's 1/6 the size of the gold market. So the gold is the big daddy rabbit in the pack, so that's the one that you have to be watching. So keep a close eye on that, and you'll be able to watch it. If we can get silver above the $15 an ounce level, that's 25 cents an ounce from where we are right now, then it will have legs. But until that happens, it doesn't have legs. It's had lower tops in here, higher bottoms, so it's been in a tight wedge, whereas the gold made the perfect ABCD pattern at 1243 yesterday. So that may or may not mean anything. We don't know. We'll have to wait a day or two. I do believe if we get below 1220 in the gold, that's $13 from where we are right now, that would signify most probably a very, very significant top in gold has been made, because that was our objective on this move. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!